The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
And our stock of the day is QBE. Now, along with other insurers, QBE's share price has fallen ahead of Cyclone Alfred, hitting southeast Queensland and northern New South Wales. Shares down 2.5% in today's session so far. Now, we had seen QBE post a 27% rise in full-year profit to $1.8 billion US, thanks to higher premiums and lower catastrophe claims, which helped contribute to its rise in profit. QBE also guiding to growth in gross written premiums in the mid to single digits for the full year 25. This prompted brokers last week to overwhelmingly upgrade their outlook for the stock. And I also spoke to CFO Inder Singh about, of course, a raft of what we're seeing with natural disasters.
Hard to predict when these events are going to happen. What we do know for sure is that the frequency of these events is increasing and continues to increase. We obviously factor that in our models. It's also the impact when these events happen is just higher than it used to be, because now we've got home building and people living in areas that they didn't before that are more prone to some of these increasing frequency of loss events.
All right, that was CFO Inder Singh. I'll start with you, Henry, because this is a stock that a lot of brokers are positive on, given that it operates in many countries. So maybe it could be buffered a bit somewhat from isolated incidents in Australia. What do you think about QBE?
Hi, I guess, at the end of the day, insurance companies do get tarred with the same brush to some extent. And of course, we've seen Cyclone Alfred, which sounds like something out of Batman, to be honest. It sounds like Michael Caine is going to pop up on your doorstep and become some sort of malevolent force. But QBE, the results were good. The stock has pulled back, as has the rest of the market, I guess. And part of that function is not just on this cyclone, but also on the fact that interest rates effectively have pulled back as well, with bond yields falling. So that is something to take into account as well. It did spike on the results. It's sort of coming back to earth. I think it's certainly an accumulate. But when you look at IAG and Suncorp as well in the same sector, and probably more exposed because they don't have that geographical diversity that QBE does, they're putting out some statements today talking about their exposure to Michael Caine rocking up on your doorstep. And there is a new thing which has been in place since 2022, which is the Australian Reinsurance Pool Corporation, which comes into effect. And certainly, that will be a bit of a buffer for both IAG and Suncorp in terms of their potential losses. So certainly, I don't think it's going to be as bad for insurers as potentially it could be, but we'll wait and see the magnitude of what happens. Obviously, our thoughts and prayers go out to those people that are in the path of from Alfred. But certainly, when you read the statements from IAG and Suncorp as well, they do have comprehensive reinsurance programs in place, and large weather events are built into their models. The actuaries do look at that. So we are seeing a pullback in both of those and QBE, possibly QBE more to do with yields, but certainly this could provide an opportunity going forward for people to look at Suncorp and IAG as an accumulate on the back foot, depending, of course, on how bad it does get. But certainly, these insurance companies do provide for these sorts of events.
All right, so Henry, accumulate potentially for Suncorp and IAG, but what would you call your view on QBE?
I think it's the same, really. Accumulate at the moment. As I say, interest rates are coming down. Not from the RBA or from the Fed, but from the bond markets as money goes into treasuries. So that is a negative, but at some stage I suspect that will reverse again. But the results from QBE were pretty good, so it's definitely one to be keeping an eye on and have on your watch screen.
All right, Andrew.
Yeah, look, I think it's a hold as well, but compared to the QBE of old, it's a very different business, and certainly they've right-sized it. Just looking at the earnings growth over the last 3 years, it's been sort of well in excess of 50 to 60% per annum. So certainly the market has rewarded them accordingly. The share price or the return rather over the last 3 years has been around 30% per annum. So certainly that's great. But to Henry's point, falling bond yields unfriendly for insurance companies, and obviously all this stuff going on, albeit Henry also mentioned the government mitigation piece. Look, I'm not a huge fan of insurers because I'm not confident they've actually priced the risk appropriately for climate change. And what I mean by that is they're pricing it correctly. It's just whether the customers are willing to pay for it is probably a better way of describing it. But it's a quality business. I know that the chair's been adding to his holdings over the last 12 months. QBE has also got the highest return on equity out of the main insurers. So certainly on any pullback, it'd be definitely one that you'd have on your list. But at these levels, it's a hold.
All right, so I guess really a hold from both, but accumulate if it does drop. Andrew saying falling bond yields unfriendly for insurers, and it hasn't potentially factored in enough of the momentum from climate change, but it is a quality business. And Henry Jennings coming through with another perler. If Michael Caine rocks up on your doorstep, I guess that's some slang for rain. I learn something every day with Henry. But he's also looking at potentially Suncorp and IAG as an accumulate there. So the stock of the day there, QBE.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.